The Federal Reserve just gave crypto exactly what it was waiting for. A 25 basis point rate cut paired with clear signals that more easing could be on the table. Bitcoin ripped straight through 117,000, and altcoins are exploding across the board as traders rush back into risk assets. This shift in policy has set up one of the most favorable macro backdrops we have seen all cycle, and right now altcoins are the ones taking full advantage. In this video, we are going to cut through the noise and focus on 4 high-conviction, data-backed signals that are screaming bullish for altcoins heading into Q4. We will cover everything from key macro trends to on-chain flows that are confirming real strength under the surface. And make sure you stay until the very end, because I will be sharing a potential near-term catalyst that could trigger a violent shakeout before we go higher, something very few people are paying attention to right now. If you are here for clear, level-headed analysis and not just empty hopium, hit that like button so we can keep pushing out quality content. And of course, subscribe if you have not already so you do not miss the next update. Alright, let's get straight into it. The most important technical signal we are seeing right now is Bitcoin dominance breaking below its long-term trendline for the first time in this cycle. After months of draining liquidity from altcoins, dominance has now dropped sharply to 57%, which is a clear sign of weakness. This is not just a small pullback or short-term noise. We just had the first monthly candle close below a trend line that has been respected for more than 2 years. That is a structural change that often kicks off major shifts in market behavior. Everything across the board is lining up. Bitcoin dominance is falling. ETH dominance has been soft since it set its all-time high in August. And the most important metric of all, Total 3 is breaking into fresh all-time highs at $1.16 trillion. Total 3 measures the market cap of all altcoins excluding Bitcoin and ETH, and it now makes up about 28% of the entire crypto market. That tells us that capital is rotating aggressively into the broader market and not just sitting in Bitcoin. This is exactly the kind of setup that historically kicks off an alt season. The drop in Bitcoin dominance and the strength in Total 3 have often signaled the beginning of the so-called banana zone, when altcoins go on their biggest runs of the cycle. What this means in simple terms is that whales and seasoned investors are taking profits from Bitcoin and are now redeploying into more speculative plays where they see higher upside. In the last cycle, Bitcoin's final top came 183 days after its dominance broke a similar long-term trendline. If that pattern holds, we could be looking at a cycle top window around March 2026. That gives several months for altcoins to run hard before things get overheated. Of course, past data does not guarantee the same result this time, but the signals right now are clear. Bitcoin dominance is trending down, capital is rotating into altcoins, and the environment is setting up for a strong period of outperformance for mid and small caps. Now, if the dominance chart gives us the forecast, the next indicator acts as the real-time confirmation. I am talking about the Altcoin Season Index, which is sitting strong around 80 right now. That is a very important level because this is only the 3rd time in the entire cycle that we have climbed this high. It signals that we are moving into what many call Phase 3 on the path to Altseason. This is the phase where capital rotates heavily from Bitcoin and ETH into large-cap and mid-cap altcoins. Historically, once this index clears 85, it often stays elevated for weeks or even months. In both 2017 and 2021, the index stayed above 75 for extended periods while altcoins kept running to new highs. We have seen 2 brief peaks above 75 this cycle. First in January 2024, and again during the election rally in December 2024. But each time we stayed in that zone for just about a week before fading back down. Right now, we have been above 75 for a full week already. And just a few more days of staying at this level would make it the clearest confirmation that altcoins are finally in play this cycle. What makes this even more interesting is that the market is not showing the extreme optimism we usually see during these moments. The Fear and Greed Index is sitting at a neutral 52, which means traders are not overexposed or euphoric. That is a very healthy sign because it shows we are still early in this rotation phase. The big waves of retail FOMO that typically mark the end stages of alt season have not arrived yet, which means there could still be significant upside ahead. I share real-time insights and cycle data on X regularly, and many of the most time-sensitive updates never make it into a full video. Make sure you're following there to stay ahead of the crowd. And if you want to be part of our inner circle without spending much, consider joining our YouTube membership for just under $10. You'll get access to a private Discord channel, a special member role, and more features are in the pipeline. Most importantly, it supports the channel and helps us keep delivering valuable data-driven updates. You can find all the links in the description. Now let's zoom out from crypto-specific charts and see how the bigger economic picture ties into this setup. The Fed's 25 basis point cut is only the starting point. They have signaled that at least 2 more cuts are possible before the end of the year, and several Fed officials are openly leaning toward even more aggressive easing if economic data continues to soften. This shift is creating what we call a full risk-on environment, making crypto assets more attractive than ever for investors who are seeking yield beyond what traditional markets can offer. Lower interest rates lower the opportunity cost of holding assets like Bitcoin and altcoins, which historically sparks massive capital inflows into crypto. We are already seeing early signs of this, with Bitcoin breaking above 117,000 right after the decision. Q4 has historically been Bitcoin's strongest quarter, with average gains of around 85%, and October alone has posted gains nearly every year since 2013, with just 2 losing months in over a decade. Combine that seasonality with a dovish Fed and growing retail participation, and we have one of the most bullish backdrops possible heading into year-end. Institutional appetite is also clear. ETF inflows have already crossed $3 billion in September alone, suggesting that larger players are actively deploying capital ahead of what they expect to be an extended rally. Many institutions are now projecting additional rate cuts through 2025, which could create a sustained tailwind for crypto and other risk assets well into next year. This is not just a short-term pump on one Fed decision. It is shaping up to be a prolonged period of crypto-friendly monetary policy, and positioning correctly during this phase could set up outsized gains as we head deeper into this cycle. One of my favorite indicators is flashing extremely bullish right now. The altcoins to ETH ratio has been climbing steadily, confirming we are now in the 4th straight week of altcoins outperforming ETH. This is a critical signal because it shows clear capital rotation away from blue-chip cryptos and into the broader altcoin market. This is exactly what we look for to confirm the start of a sustained alt season. As I have mentioned in earlier videos, this surge began right after ETH printed its new all-time high, which is a textbook pattern. Once the large caps peak, smart money starts moving into smaller opportunities with higher upside potential, and that is what we are seeing right now. Total 3, which tracks the market cap of all altcoins excluding Bitcoin and ETH, has broken decisively above the 1.13 trillion level that acted as resistance for nearly 4 years. The weekly chart is now forming a textbook bullish cup and handle pattern, with the next major upside target sitting around 1.6 trillion. That represents almost a 40% move from here and would translate to significant gains across the entire altcoin market. This rotation is not a one-off event. All the supporting data points line up. Altcoin trading volumes are rising while Bitcoin and ETH volumes cool off. New listings for smaller projects are picking up, and liquidity is spreading out across the ecosystem. If this momentum holds, we could see this trend carry right through Q4 and deliver some of the most explosive returns of the cycle. Okay, we've just laid out 4 incredibly bullish signals, but as always, this channel is about balanced and realistic analysis. Here is the potential curveball that hardly anyone is talking about. Today, September 19th, we have a massive options expiration event that could bring serious volatility to both traditional markets and crypto. Roughly $4.9 trillion worth of stock and ETF options are set to expire in a single day. To put that in perspective, that's more than 1.2 times the entire crypto market cap. This is what's known as a quadruple witching event. It happens on the 3rd Friday of September and involves the simultaneous expiration of stock index futures, stock index options, stock options, and single stock futures. In crypto, over $1.6 billion worth of Bitcoin and ETH options are expiring today. What stands out is the Bitcoin put-to-call ratio sitting at 1.38, meaning there are more bearish bets than bullish ones. Historically, these massive expiration events have triggered volatility. Looking at previous patterns, we saw similar setups play out earlier this year. In March 2025, markets sold off in the weeks following a major expiration event, and in June 2025, Bitcoin dipped below 100K and spent almost a month consolidating before resuming its uptrend. Right now, leverage is peaking across crypto markets. Altcoin open interest just hit an all-time high of over $40 billion, with Solana leading at $7.6 billion. When leverage gets this stretched, markets usually need a healthy flush before the next move higher. My view is that we could see some short-term volatility and downside pressure as these options expire and leveraged positions get wiped out. This shakeout would likely clear the way for Bitcoin to make a clean push to new all-time highs as the strong macro and on-chain bullish factors take control again. So there you have it. 4 powerful data-backed signals pointing toward the start of a major altcoin season, along with one important short-term risk to watch closely. The overall setup remains incredibly bullish, but staying ready for volatility is what separates winning traders from the ones who get shaken out. If you found value in this breakdown, hit that like button to support the channel. I'd also love to hear your take on this. Are you already positioned for the next leg of altcoin rotation, or are you planning to wait for a potential dip before adding exposure? Share your thoughts in the comments. I go through every single one and genuinely enjoy seeing how the community is thinking about this market. Thanks for watching, and I'll see you in the next one.